Give this a few seconds. We're at the 1 minute mark, John. I think you're ready to go. Good. Good afternoon, everyone, and welcome to today's Neo Spotlight. And we're going to put the spotlight on quite interesting and I would even dare to say exceptional company, Liquid Meta. And I have the pleasure and the honor to have with me today Jonathan Wiesblatt, known as John, who is the CEO of Liquid Meta. John, welcome to today's Neo Spotlight.
Thanks, Joss. Thanks very much for having us today. Pleasure.
True pleasure. And John, to kick things off, let's start maybe with some basics. I think that when you look at the company and you look at the community around the company, I'm sure there's many people who know you very well, and I'm also convinced that there's people out there who don't know your organization very well. So could you maybe give us, as a starter, a bit of an overview of what is the focus of Liquid Meta? What is Liquid Meta's value proposition?
Sure. So Liquid Meta, Joss, is designed to be a Web3 company, and our major goal or mission is to really bridge. A lot of companies are using this tagline, but we really are trying to be the bridge between traditional finance and decentralized finance. So I spent the last 20 years of my career working in TradFi, traditional finance. And when my partners, the other co-founding members of Liquid Meta, they approached me several years ago. They started to educate me and point me in the direction of DeFi. And when I realized that there was a lot of disruption, technological disruption occurring in decentralized finance, and the biggest shift in the market would come from, or market share gains would come at from traditional finance. And so when I recognized this disruption, it wasn't hard for me to make the decision to engage in a business focused around DeFi. So Liquid Meta's mission is to build that bridge. And what we do is we are focused right now on a liquidity mining operation. So we have raised capital from most recently the public markets. That capital has been used on Liquid Meta's balance sheet and deployed across several decentralized applications, exchanges. And what we're doing is we are generating daily revenues and daily cash flows from this operation. And we've been doing so since the very first day. And then just to provide another basic framework of the business is we are designing and developing software tools and technology that will allow us to enhance our liquidity mining operations to the point where we can start to offer it out to others who are very curious and interested in accessing DeFi. And where DeFi is very interesting to a lot of these organizations is that we're seeing a lot of high yields, disproportionately higher yields than you would otherwise find in a traditional finance environment. So we are planning to provide that access.
So two big components to it. On the one side, you invest yourself in DeFi app or dApps, as they call it, exchanges, and then you want to enable other parties to get that same access. Could you tell us a little bit about what the focus of your investments are? Like what is your thesis over there? Where are you investing? Whatever you can share, of course, because I don't want to take your secret sauce away.
Yeah, so Joss, I won't disclose these very specific dApps and liquidity pools that we are providing liquidity to. But what I will say is we run a very diversified strategy, and we run a strategy that is considered to be very low volatile. So as everybody knows that's involved in the crypto space, crypto can be quite a volatile asset class. Liquid Meta was designed to be low vol, to provide that access to institutional investors, enterprises, pension funds, sovereign wealth funds, those that I mentioned earlier that are curious about the space in a very low volatile manner. So how are we deploying the liquidity today? We're deploying across 8 different networks or blockchains. We're deploying across greater than 15 different dApps or decentralized exchanges and greater than 22 different liquidity pools. So never at any one given time will we deploy a significant amount of balance sheet. And the reason for that is we don't ever want to impair the capital permanently. So although we're finding very attractive rates of returns across decentralized finance, we are doing it in a very methodical and very low volatile manner. So let me just dig a little bit deeper, drive a little bit deeper into that
Yeah.
low vol comment. So where we are supplying liquidity is typically across a number of different strategies. For the most part, we are using a great number of stable coins as a way to deploy liquidity. When I say a stable coin, I'm often referring to things such as USDC or USDT. Your audience should be very well and very familiar with those types of coins. The other way that we supply our liquidity, and this is another example of the strategy, is through a stable coin and a volatile coin. Where we are supplying a volatile coin, for example, ETH, the token of the blockchain Ethereum, we try to reduce our exposure to the price volatility of that underlying token so that we are just continuously collecting that revenue vis-a-vis transaction fees and reward tokens while reducing our exposure to that volatile token price. So we don't want the balance sheet rising and falling with the price of ETH in that example. So stable, low volatile, very diversified, and that's really the methodology that we're deploying across decentralized finance today at Liquid Meta.
Well, this really sounds like applying what I would call advanced portfolio management techniques and methodologies to this new world, while a lot of people are just kind of stepping in and not spending too much time thinking about it. So, in fact, a great way for someone to invest in this space and at the same time managing risk in an optimal way. Is that a fair way to define it?
So my background, like I mentioned earlier, is in traditional finance, and I spent 15 to 20 years on the buy side, and I learned from some very, very great investors. I spent some time up at 9 Point and Sprott, and had the pleasure of working with some brilliant investors, and I was able to take a number of lessons about diversifying your exposure to certain asset classes, whether it was fixed income or equities. And so I've taken a lot of those lessons and those teachings and those experiences, and I've applied them across the chasm to decentralized finance. And although this is not a finance business, although this is not a financial services business per se, as we would understand it to be in the traditional world, I have been able to, and my team has been able to, take these applications, these methodologies, and apply them to DeFi. So I want to be very clear. This is a growth technology company. We are building tools and products that will provide access and scalability to decentralized finance, but we are also overlaying that with risk management, risk mitigation, diversification, all of the things that one can study in TradFi. So it's like I said, it's a bridge to bring one area of the universe across the other, and Liquid Meta is really that central technology piece that is going to merge both. And that's the way I would like shareholders, investors to really understand and appreciate the story.
Yeah. No, totally get it, and I think you are a perfect example in the way you describe it of that bridge, and clearly, yes, I think it's very important for investors or future investors in your company to realize those two components also of what your business strategy is, and that technology component, which is definitely a big opportunity of growth. John, a bit on stepping aside, and you use the word volatility, and your objective is to look at strategies that reduce or manage volatility. But what are your views around the market today? Like it is pretty darn volatile, and what is your high level assessment of what's going on in the market, and your longer term views on that? And then as an ancillary question to that, it's a question that I always like to ask. Where does Bitcoin fit into all of this? Because what I always see is that it still seems to be Bitcoin that drives everything else. And when I look at Bitcoin, I'm always having a hard time to tie that totally back to the entire DeFi promise. But I'm curious about your views on that.
Right. So there's a number of things in that those lines of questions. So let me start with the Bitcoin comment. So we are seeing a great deal of correlation across crypto to the price of Bitcoin and secondarily to Ethereum, the two largest assets within this asset class. So when Bitcoin sneezes, just like when the bond market sneeze, the equity markets react. It's the same thing that we see in crypto. When Bitcoin sneezes, the rest of crypto catches a cold, and altcoins, can catch pneumonia, right? And the vice versa on the flip side. When Bitcoin starts to heat up, all these asset classes, is what I'm trying to say, are very, very tightly correlated. As adoption rates across crypto advance, as there are more and more people like my former self, traditional financial service professionals, start to adopt crypto more and more, I think you'll tend to see those correlations start to deviate. So right now, the leadership is coming from Bitcoin and Ethereum, and I think that's logical. And like I said, adoption rates will start to erode that correlation at some point in the future. The next thing that I will say is the industry is so nascent, it's so new. And what I'm referring to is decentralized finance now. So the real start to DeFi started with the emergence of Uniswap, which is the largest by market value and trading volumes. It's the largest decentralized exchange globally. That product or that piece of technology, and when I say technology, I refer to an automated market maker, an AMM. When that first was introduced to the marketplace by Uniswap, that was just 2018. We're only 4 years in. And so somebody like myself, you spend your entire investment career, my former career on the buy side, waiting for the emergence of a new trend such as this one. And for example, I'll take you back to the late 80s, early 90s with the rise of the internet, right? And I'm starting to see people of my age bracket now feeling a lot like the way that my parents and the generation before me felt when the internet started to rise. So, Web 1.0. And so what's happening today in this Web 3 environment is it's breeding so many growth industries, sub-industries. So we can look at things like the metaverse, decentralized finance, NFTs, GameFi, play to earn. These are all trends that Liquid Meta is able to expose shareholders to through its liquidity mining practice. So the market is very new, it's emerging. And going back to the point I was making before, correlations are high today, but with adoption rates rising, I expect that correlation to start to break down. The last thing that I will say, and in reference to your question about volatility, the markets have been extraordinarily volatile lately. And we've seen, again, going back to that term of correlation, we've seen a great deal of correlation between decentralized markets, crypto markets, and TradFi. So the NASDAQ 100, the QQQs, they've really been very tightly correlated with the price of Bitcoin and Ethereum, the crypto markets. And again, I think that has to do with adoption rates. As adoption rates rise, I believe that correlation will start to break. Now, why are we seeing volatility across all risky asset classes? The NASDAQ, equities, crypto. Well, that's because we're now we're exiting a period of very low interest rates, right? I would say that inflation rates are high, which are causing investors abroad to really worry about, the prices of goods and services and overall market values. So growth and risk is at the center and the focus of that. When rates are rising, when inflation is rising, growth assets tend to decline, all risk assets. So we're seeing that with equities and we're seeing that with crypto. So macro related events are really triggering this volatility today. As the market starts to price in a lot of these these catalysts, these macro catalysts, I think things will start to subside. However, the last thing I will say about volatility is I would not expect crypto markets to be low volatile risk assets going forward. And that is why Liquid Meta is such an interesting value proposition to shareholders. People that are curious, people that want to play crypto and DeFi can do it in a very sane way through the shares of Liquid Meta.
Yeah. I think that is very thoughtful, and I hope indeed that we're going to see that decorrelation emerging, and I think it will come with maturity and understanding that all digital assets are not equal, and I think that that's still a bit of a challenge out there. But your approach and also the education that you can provide, I think, is very valuable from that perspective. Now, John, let's maybe take it to something else. And you mentioned that earlier, and it's something that I would like to underline and ask you a few questions about. So, how long has your organization been around?
So the company was created in January of 2020. So we're quite new. The business was.
Yeah, go ahead. Sorry.
So January of 2020, we created Liquid Meta. My partners and I, the co-founders of Liquid Meta, have been working with one another since early in 2018. So really, the genesis of all of this was the formation of a 4-team founding partnership, 3 of whom are extraordinary technology business builders, investors, thought leaders, and then there's myself, the one of the 4 that comes from this traditional finance world. So we launched the business in January 2020, and we investigated a number of business opportunities. We realized very early on that we wanted to work with one another. We wanted to collaborate. There was a lot of very common capabilities amongst the 4 of us, and everybody brought something unique to the group. And then I guess it was almost a year ago, we decided that liquidity mining, decentralized finance was an area where we could create a phenomenal business opportunity and a business model. And so the business was formally created last March. There was a founders investment round. We then went on in June of 2021. We offered a seed round out to investors, which was very well received. And then in December of this year, we closed an amalgamation transaction in RTO, and we went public on the NEO exchange on December the 22nd. So it's been a rapid rise of Liquid Meta, but it's a business that has been really curated over a number of years.
Well, I think you probably gave the answers to the question I was in fact going to, because the question about how long has your organization been around was a bit of a lead question to something else that was to ask you. You've been around for a very short period of time when you think about it from an organization and a business perspective, as you just described it, and you are already generating revenue.
Correct.
Which is quite, I will not say novel, but quite fascinating for such a young business. And you probably gave quite a few of the reasons behind it, the quality of the people coming together, the vision, but there's also a big element of execution over here that must be very critical in achieving that.
Right. So as you mentioned, the business model is quite unique. And one of the reasons why I became just so fascinated with the entire ecosystem in decentralized finance, you could take some capital and have the right approach, and you could put it to work as liquidity supply quite rapidly and start generating revenues if it's done properly right away. So what I want to really emphasize here is just how difficult it is to do this at scale and to do it successfully. So if you were just going to take some of your own personal capital, Joss, and try to deploy it across decentralized finance, there's really a number of things that you have to consider. Number one, security. So if you're following DeFi very closely, you'll realize and understand that the security of your capital is paramount. There can be a number of security issues like hacks, thefts, bank runs, etc. So if you don't know what you're doing, Joss, your principal capital will be at risk. So at Liquid Meta, we spend hours and hours and hours researching, studying, looking at audits of smart contracts, working our way through the various decentralized applications, really honing in on our craft with a team of analysts and capable, DeFi professionals, really mitigating that security risk. There's a bunch of other things you have to consider as well, and those are the network fees. So if you were deploying some of your own capital, again, Joss, and you were doing so across the Ethereum blockchain, for example, your gas fees could be quite high, your network fees could be quite high. You'll erode your principal capital really, really quickly. So Liquid Meta has just built the technology, the capabilities, and the team to navigate through a lot of those issues in DeFi to make this a profitable venture from the very beginning. So it's not as easy as it sounds to do this. It's not like your traditional, and I say traditional, it's funny. I'm going to refer to crypto miners, right? It's not like going out and buying some hash power and some computer, some hardware, and running some software and collecting Bitcoin and Ethereum. It's a little bit more complicated and thought-provoking than even that type of business. So I guess that's just a roundabout way of answering your question.
Yeah, no, I think it's absolutely impressive, and it just tells you something about the quality of the team and the many facets of the team to be able to do something like this. Now, if you look at your organization, if you look at Liquid Meta in the future, like what how do you look at growing it and expanding it? So there's the entire technology component, access provision that you talked about. So maybe a few more words about that. But let's look a little bit further into the future, and what else are you thinking about, and where do you see yourself in 2-3 years?
It's a great question. So let's first start with the first phase of our growth, and that's going to be over the next 12 months. So Liquid Meta is very focused, laser focused on advancing our technology, advancing the product that we are going to be using internally to maximize the efficiencies, generate the most revenue in the most stable manner across decentralized finance. Once that technology has been fully maximized and we're ready to scale, we are going to offer this technology and these services and capabilities out to the broader masses. When I say the broader masses, it's not a B2C model. We're looking towards a B2B model. So like I mentioned at the beginning of our chat, Joss, there's a real gap in the market for a product that an institutional investor that's curious about decentralized finance has at their abilities to go and deploy some capital. So once we fully build out the tech stack, are comfortable using it for ourselves and proving to ourselves that it works, it's robust, it's efficient, we're going to put it out to the market. So that's the next layer of growth. Now let's talk about all of the other things in the decentralized / crypto environment, these emerging subsets of the marketplace where Liquid Meta will continue to expand its operations towards. So we have a tremendous growth opportunity in NFTs. Non-fungible tokens is a very, very growth area of the marketplace. Liquid Meta, although it's a supplier of liquidity to certain areas of the market that might touch NFTs, we would like to expand our presence and our capabilities and expertise in that area of the market. We feel that is a very, very important place to allocate time and resources going forward. There are other areas of growth that are happening at the very present, which we're also looking to expand our presence. So play to earn, I mentioned earlier, GameFi. This is the area of the market where people around the world are earning reward tokens for playing games on mobile devices. And so Liquid Meta, through certain partnerships, is starting to access more and more exposure to this emerging market. For example, you could have seen a press release that we issued a couple of weeks ago that talked about a partnership forthcoming with a company called XLD. This company is based in Southeast Asia. And what this company does is it provides a network for gamers that are collecting SLP tokens, which is the token of the game Axie Infinity. By the way, Axie Infinity has 2.5 million active daily users. it provides a platform for these gamers to offload some of their tokens that they've collected to use as real world utility, to pay bills such as mobile device bills, rent, utilities. Some people are even buying airline tickets. All of this stuff coming back to Liquid Meta, everything in DeFi, in decentralized finance, it requires liquidity. And as we mentioned earlier, Liquid Meta is really the engine, the provider of that liquidity in order for all of this stuff to work. So lots of technology applications being built at Liquid Meta today, the core business. And then there are these other emerging areas of the market in which we would like to expand our presence in. So we have a very, very busy next 12 to 24 months ahead of us.
That's exciting. That's exciting, and it's fascinating to see how things always continue to grow and expand, and the opportunities that are out there that a lot of people are probably not even aware of, and you're executing upon it already. The other key question, that anyone will have, of course, in the back of their mind. I can put myself in that category, and here I'm going to give a cautionary word to everyone. This question that's going to come is not about giving anyone advice, but this is about sharing some thoughts about the company, about the stock price. So, John, the question that I always have when I look at a company is, when is it the right moment to step in? Like, I do my homework. You got to do your homework. You do your homework on the team. You do your homework on the value proposition, and then you say, is this the right time? Should I wait a little bit longer? The market is maybe going to get impacted by a correction, or no, this is going to take off, and I should take an opportunity now. What are your thoughts on that? And again, as I said, this is not giving advice to anyone. This is giving some views on where the price of the company is today, and how you see that being impacted by future developments.
Right. So what I will say to start, and just as a caveat, I never met a CEO that didn't think that their stock price wasn't a buck. So let's just start there. And then let me just provide some of your listeners and prospective investors with a framework for valuation. That's the best way that I can just put Liquid Meta's valuation into perspective for everybody.
That's
so Liquid Meta.
I was going to say that is the point. That is, what is the rationale behind why you should buy?
Yeah. So Liquid Meta today is approximately a $50 million Canadian market cap company. The company has raised approximately $25 million US dollars, which has been on its balance sheet, and it is, for the most part, if you go back to our earnings announcement from Q2, I made the comment that we have deployed greater than 20 million. So what I've also said is you can go into the marketplace, into DeFi, and you can go across the various applications and exchanges, and you can look at where yields are coming from, both from stable and stable volatile and volatile areas of the market. So without providing the market any guidance, because Liquid Meta hasn't done so, you can get a good sense for a range of where a lot of these yields are today. And then you can walk through some top line expectations for the business. You can then look at some of the gross margins that we've discussed publicly, and you can see that the gross margin before the price movements of the crypto underlyings on the balance sheet and before the cost of hedges, our gross margins are between 96 and 97%. After you factor in those other two components, so the gains or losses on crypto holdings and the cost of hedges, you can see in the second quarter that our gross margin was around 78%. So there's just a couple of data points for investors to run some of their own math. And then you can look at the balance sheet, how we're generating revenue and how much cash flow. And then you can start to look at market comparables for growth multiples on revenue and multiples on cash flow. Like I said, this is a technology growth company, so I think you really have to look at enterprise value to revenue, or enterprise value to EBITDA, enterprise value to cash flow to value Liquid Meta. So then let's peel back the layer of the onion further, and let's look at some of the groups that I would compare Liquid Meta to for valuation proxies. Let's look at the crypto miners. Okay, some of these companies are now multi-billion-dollar corporations, for example, Marathon Digital, and they can provide you with a very good, understanding for how these companies are being valued on a price to rev or price to cash flow multiples. These businesses are very volatile, so their cash flows will rise and fall with the price of Bitcoin and Ethereum, right? Because that's the underlying that they're exposed to. These businesses have significantly lower operating margins, and they're way more capital intensive. So what I would argue to you is that the valuation of our business should at the very least be in line to a premium to the crypto miners. Now, if you look at some of our peers that are trading on the NEO exchange, for example, of which there are a few notable ones, I would say that Liquid Meta provides an opportunity given its market capitalization relative to some of the others. Some of the others have done an incredibly great job growing their businesses, telling their stories, and are led by some very impressive investors and shareholders. Some of those companies trade at 2, 3, 4, and even 5 times the market cap of Liquid Meta. So I think that just provides investors with a little bit of a framework for how to value our shares. And at 50 million, I do believe that it's a great opportunity for people to gain exposure. I actually was buying some shares at the current prices just a few short weeks ago after we released our quarterly results, if that is indication of anything.
Thank you, John. We see here again your background, a thorough analysis, a real rationale, and not driven by just what I would define as emotions or buzzwords. I think it's very interesting to listen to you. Now I'm going to say one funny thing to you. We already are more than 30 minutes into this conversation, and I've got the impression that we just started. It's quite fascinating how quickly this has been going by, and I probably have another 10 questions I would love to ask you, both about your company, about Liquid Meta, about some of your future strategies, and about the entire ecosystem in which you are operating. But I think that will be part of a next spotlight, or maybe another opportunity that we will set up. I would like to take this opportunity to say a very big thank you. You were very insightful. You were very candid in your answers. And what I said earlier, what I really loved about it, you can see that there's a true rational brain behind this entire initiative, and I'm sure that you play a key role with your other team members in having an incredibly balanced team to take this forward. So thank you very much for your participation to today's spotlight. I'm going to wish you extremely well and a lot of success with Liquid Meta, but based on the foundation that I see, I think you're in a pretty good spot. John, thank you very much for your time, and let's make sure we do this again.
Thank you very much. It was a pleasure.
Pleasure. Take care. Be well.